Is Tesla overvalued? We dive in on this energy and industrials edition of Industry Focus. Greetings, fools. Sean Riley here at Fool Headquarters in Alexandria, Virginia. It is Thursday, May 12th, 2016, and joining me via Skype to decide once and for all if Tesla is massively overvalued or just getting started on its path to world domination is Motley Fool contributor Daniel Sparks. Good morning, Dan.
Hey, Sean. How's it going?
Pretty good. I don't know if you maybe heard this on the news, but we're on like day 15 of just rain and clouds in D.C., so I got to ask, what is it like in Colorado right now?
Well, it's finally getting sunny, which is nice. So we had a foot of snow on the 1st of May, so it was a wild start to the summer.
I will stop complaining now.
Okay. Sounds good.
So we're talking Tesla today. It's been a long time coming. We don't nearly talk about this hugely important company nearly enough on the Energy and Industrial Show. And you're kind of Mr. Tesla on Fool.com. And full disclosure, you own one, so you're probably a little bit biased. And I do think the listeners should be aware of that.
Yes.
But first thing we got to talk about is valuation. I don't think I'm going out on a limb to say that this puppy is priced for perfection.
Yeah, I definitely, I would have to agree that the stock is pricey, and that's something you won't see in my articles is me recommending the stock. Not that I'm
A bear.
advocating anyone to sell, but I do own shares, and I'm happy to own shares, but I haven't bought shares in a while.
So they're on track to sell 80,000 cars this year. Where are they in terms of valuation compared to other automakers? Because, I mean, Ford sells 15, 16, 17 million cars a year. BMW sells like 2 or 3, I think. I mean, where does everybody stand?
Yeah, so that is a good way just to quickly put it in perspective is, we have a $28 billion market cap for Tesla. They're on track to sell just 80,000 cars a year. So right away, we know this stock is priced for growth. So, a lot of people, they want to get in early, they say, on a stock like Tesla because, there's still so much growth ahead. But investors should always pay attention to things like this. It was getting in early when this sort of growth wasn't priced in, but at $28 billion, the growth is priced in. That's what's happened. The market does accept that Tesla has a big opportunity ahead of it. So that's kind of how, right off the bat, you just need to recognize this is a stock priced for growth. Now, there are some areas we could look at that where the stock could live up to this valuation, and some particular areas I like to think of Tesla as growing into its valuation is the optionality that comes with a CEO like Elon Musk, and the optionality that comes with a powerful brand with a first mover advantage that really has carved out a niche for itself. So that's an area we could talk about.
Okay, so what are the reasons to be optimistic that they could actually, warrant a valuation that they're being awarded right now? Because you got GM being valued at $48 billion. I mean, that's only $14 billion more than Tesla. BMW is at $50 billion. Another, premium automaker. What does Tesla have to do in order to deserve this?
So first of all, there is that growth they want to live up to, and I think we could talk about that in a little bit. We'll kind of, because they did recently announce they're going to double down on their growth goals, so we'll come back to that. That's more of a topic of itself. But as far as the optionality, you look at companies like Amazon is the perfect example of optionality. Now, I'm not saying Tesla can mimic that or mirror it, but perhaps a concentrated version of how Amazon is expanded into different areas is how investors are kind of thinking about Tesla. So you look at Tesla and you have, first of all, software. Tesla develops its own software, its own hardware. It builds its own computers in the factory. The vehicles are far more vertically integrated than most auto manufacturers, and Elon Musk only wants to increase vertical integration. They're tipping their toes in energy storage, dipping their toes.
That
Sorry.
seemed to come out of nowhere. I mean, they just one day,
Right.
oh, Tesla announces the Powerwall, and I'm like, what the heck's the Powerwall? And
Right. And they've been really quiet about it, but the business it is a success so far. Sales are growing. In fact, they're on pace this year for the energy storage business to already be a positive contributor to their operating cash flow. Then we have Tesla as a supplier is something that could happen someday. They're far ahead of anyone else in setting the foundation for building batteries, for building the components of electric cars. And then there's just the unknown, the optionality that they could enter areas we haven't really thought of. And that's kind of what happened to Amazon over time is there's areas that they expanded into that we would have never guessed. But when you have a visionary like Elon Musk at the helm, then those are things you can understand. And then this isn't just pure speculation that they'll probably expand to other areas. It's almost certain. The brand is extremely powerful. Elon Musk has expressed interest in doing things like, autonomous vehicles and vertical integration, all these things I mentioned. So,
yeah. So it seems, is it conceivable to you that Tesla starts licensing out parts or software to other manufacturers or like city buses or something? Because I know that Musk has actually talked about how we need to rethink public transportation. I mean, is that kind of what you're alluding to?
yeah, so, I think that there will be things coming in the future. Uh, One area, a good example, I guess we could turn to as an example is autonomous vehicles. And you know, he's alluded to the fact that um, Tesla probably wouldn't rely on someone like Uber or partner with someone like that, that they could actually become that middleman as far as providing some sort of an autonomous service in the future. Whether they do it or not, this is still speculation, but that's an example. And, they're putting their actions where their mouth is when it comes to autonomous driving and vehicles like that. It's the only car where you can get in, drive itself on the highway, and change lanes automatically for you. And frankly, you can't really drive a car without changing lanes on the highway in the
Right.
first place. So,
Yeah, you had that great piece. Was it last year where you actually let your Tesla drive you on the freeway? Um, and I,
yeah, yeah. So I did do 61 miles, and that without touching the wheel. I did have to touch it to let the car know I was there occasionally, but
yeah,
that is a good example. A car, I couldn't have done that without changing lanes. So it is a huge advantage where they're at, and they're pushing it aggressively. So they kind of exploded on it. That scene when the Model S was actually far behind. Then they just exploded right into the lead position. And I think they're really going to be aggressive about pushing that in the future. So that's kind of an area of optionality we see with a company. And when you integrate your own software, you build, you vertically integrate the hardware for that powers the software, and you're increasingly vertically integrating your cars. It just presents new opportunities that other automakers might not have, especially in this time of transition for automobiles. So that's kind of how I look at optionality, and I think that's one reason not to sell the stock if you already own it.
got it. So you do think that competition could theoretically be a good thing for Tesla?
Yeah, so that's another area is that I actually have always been excited about competition, and you know Elon Musk has pushed that view too, not very aggressively, surprisingly. I don't think he
What?
really
But he open
watches.
sourced. I mean,
Right.
everything.
Exactly. Yeah.
So
He's taken the actions, but he doesn't really talk about it very much. But I'm pretty sure that Tesla is very happy, to see competition, and not just because of their mission to, reduce emissions over the long haul, but because Tesla needs help convincing consumers that this is the mass market way to go. And it's not even something that, as a Tesla owner, I ever try to convince anyone of. There's no convincing someone that electric cars makes sense. It's just something you kind of have to experience. So, a Tesla owner has actually made me believe even more that we need competition. We need other electric vehicles on the road. because for every car it takes away from Tesla, for every customer it takes away from Tesla, I think that it could expand the addressable market, the total addressable market for fully electric vehicles by even more. So,
The more
mhm,
commonplace electric cars become, the more likely it is that the layman will buy a Tesla.
exactly. So I actually that is one of the interesting things that could potentially lower risk in my view of Tesla is competition, and especially now that we see that there's obvious demand for it after the Model 3, and so it kind of Tesla's growth is a risk, but at the same time the fact they're pulling in these competitors and competition could spur demand for the total market.
Awesome. So we have to pretty much talk about their accelerated growth plans. Earnings
Right.
came out; they were not that super great. They've had a slew of executive departures, including was it the VP head of manufacturing? I forget the guy's exact title. But on the same day or a couple of days after, during the earnings call, Musk announced that Tesla had moved its $500,000 production goal from 2020 to 2018, 2 years ahead of schedule. Given Tesla's history of slightly falling short of its goals, the Model X has been plagued by
Mhm,
delays and stuff.
mhm.
Do you think this is realistic or not?
Well, no, no. First of all, we'll just turn to why, and it does make sense that they pushed this production goal. They wanted to build the 500,000 vehicles per year by 2020. They pushed it to 2018. It makes sense that they did it. Yet, so the question is why. But after receiving their 400,000 deposit-backed reservations, not orders, that was a clear signal that the demand story for Tesla continues to look optimistic. So,
Mm-hmm.
but just because the demand is there doesn't mean that they're going to be able to pull it off. And so this is something investors should think about. Um, Now, like you said, the Model X has came along with a lot of issues. There was in let's see, the greatest issue for the Model X for sure was when it comes to product development. The car was arguably 2 years late, and that's a huge deal.
And it wasn't
So
because of the Falcon Wing doors. So
yeah, it was a range of issues. Now, you could say that Tesla decided to focus more on the Model S as sales began to take off because prior to the Model S launch, the only significant number really mentioned was they expected to sell around 20,000 cars a year. And then it's clearly exceeded that. Last year, they sold around 50,000 Model S. But there were more issues, and Tesla's admitted to that. So there were problems. So that does, it presents some risk to the Model 3. Now, Elon Musk in the last earnings call was quick to say, uh, don't relate Model X production to Model 3, that they're very unrelated. And it is fair to say that the Model X was probably one of the most complex vehicles ever made. In fact, GM actually said one time that,
because didn't they
the
buy
Model
one
X
just to
was
get a look at it?
impossible to produce. So even their competition would agree it's incredibly complex. And then the Model 3 was built from the ground up to be easy to produce. So, there's a possibility they can do this. It's going to create a lot of risks because of they're going to need to raise capital. They're going to and we could get into some of those risks toward the end. But I would say that there is a possibility it can happen. But the fact is, we are speculating. They're producing 80,000 cars per year now, and Tesla's hoping they can produce 500,000 per year in just a few years. This is speculation. This is what it looks like, and you look at the history, and it's unclear that they're able to pull this off.
Did you hear that theory
Hmm.
that it was floating around the internet, but that Musk knows he's not going to reach the 2018 goal? He just did it to get a sense of urgency all throughout Tesla HQ.
Yeah, well, he talked at length about that during the earnings call, and I think that comes back to this LA Times article where an LA Times and Elon Musk have been going back and forth for years now. They have a long history of kind of duking it out in the form of articles and tweets. But basically, I think that the basis of that article was they just went into the risk factors section of Tesla's most recent 10Q. And obviously, any investor who reads 10Qs and 10Ks knows that you're just obligated to lay out, risks and worst case scenarios. And every company, no matter how bullish the CEO might be, uh, lays out very, bad scenarios in the risk factors section, and puts it all out there just because they have to. So that's kind of the basis of that. But he did mention in the most recent call that this is this is an aspiration, but they are confident that they can get close to it. So
Awesome. So what do you think the risks are? Because, you do think they are revolutionary. They're obviously doing something that's impossible. GM has admitted that the Model X, as you say, is practically impossible to make. They did like buy a model just to get a look at it, didn't they? I didn't make that up.
yeah, I think that that's normal for automakers to do that.
Yeah.
Happened with the Model S too, and the Model
Um,
X.
what do you think are the risks to owning Tesla, especially in light of new growth goals, basically?
So let's see. The big there's the obvious risks like competition could come in, and demand could fall. We kind of talked about that a little bit, but specifically to the business, when it comes to bigger goals, it's not all, positive and rosy. There's some significant problems that come along with that. And Tesla alluded to all of these problems in its most recent call, and its most recent letter in particular. And one of them is higher capital expenditures, which, Tesla not producing any operating cash flow right now, uh, typically needs to fund its capex with outside funds. Um, so let's talk about capex for a second. So this year they expected to spend about 1.5 billion on capital expenditures. That was actually down very slightly from last year, and that was a good thing. I was happy as a shareholder to see they still have these huge growth goals, but they're able to actually spend less this year. And then in the first quarter, they held to that. Their capital expenditures fell 47% sequentially, and they were showing some huge discipline in their spending. But alongside these goals, they're going to have to spend more. So they announced they're going to have to spend 50% more than they thought. So instead of 1.5 million, they're going for 2.25 million this. I'm sorry, billion. 2.25 billion this year is what they're planning to spend. So capex is jumping way up from last year. So that's a problem. So
Is that because of the Gigafactory or?
now, so that's just everything related to their enhanced goals. So the Gigafactory has already been quite an aggressive investment, but I'm sure that some of that is going toward the Gigafactory, but mostly we're talking Model 3 development, paying the suppliers to make sure they're hitting their deadlines, they're tooling the factory, things like this. So that's going to be a lot of what this is going toward. And then, obviously the expensive salaries of Silicon Valley, et cetera.
Naturally.
So, anyways, so yeah, higher capex this year. That's a big risk, and it is a risk for a company like Tesla who doesn't have operating cash flow, and that kind of leads us into the next risk, which is their delayed cash flow goals. So, we're also talking not just higher capital expenditures, but higher operating expenses this year. So, I I think you have to double check me, but they were planning for operating expenses to increase about 20% this year. Now they're saying somewhere around 20, a range of 20 to 25%. And that extra 5% is a pretty big deal when when, like I said, you don't have operating cash flow. So this has led them to delay their cash flow goals for this year, um, which their cash flow goals, to put it in perspective, was not to be cash flow positive on a free cash flow basis. We're talking core operating cash flow, which is actually a non-GAAP metric that Tesla has that basically accounts for the money coming from their asset-backed line, and that's kind of a longer story. but it's not a good cash situation. So they're going to be spending more cash, delay their cash flow goals to be nearly positive operating cash flow this year. So those are two risks that are big ones. And then the final one is they're going to have to raise more capital. So obviously, not producing operating cash flow, they're going to need to either have an equity sale or go to the debt markets, which either means diluted ownership for shareholders or more debt. So this is a lot of increased risk. Obviously, if they pull it off, could be more reward, but huge risk too.
Got it. So what do you think the prospects are of a capital raise coming around?
I think it's almost certain, that their management emphasize they're trying to fund as much as they can with their own funds, but having a buffer is important, and they're going to try to de-risk as much as they can by raising equity or going to they haven't specified exactly how they're going to raise capital. I suspect it would be raising equity given the valuation of the stock, but it's not entirely sure just because the stock is down. I think by double-digit percentage points, somewhere around there, from when they last raised equity. So
Got it. Yeah, I mean they had 1.4 billion in cash in the bank as of March 31st, but I mean accounts payable was $1 billion, so I mean they're definitely going to need to
right.
raise some cash. But anyway, all right.
Yeah.
So thank you for your thoughts, Guy. You get the final say. New money. You don't seem to think that they should step up to the plate and buy into Tesla.
Well, yeah, I mean the stock is down recently, so it makes it a little better buy. But as far as buying high-priced stocks like this, I usually prefer just to put a little bit in, get my feet wet, see how I feel. The stock goes down more, maybe buy some more. That's kind of how I'd approach it at this time. But I definitely wouldn't be selling. I think their execution compared to their aspiration sometimes falls short. But if you just put away those aspirations and look at what Tesla's doing, it's some pretty big stuff.
Awesome. Well, at the very least, you definitely recommend their cars.
Yeah, I enjoy the car.
Awesome. All right. Well, thanks for your thoughts, Dan. We will catch you later.
All right, thanks.
Have a good one.
You too.
And if you're a loyal listener and have questions or comments, we would love to hear from you. Just email us at industryfocus@fool.com. Once again, that is industryfocus@fool.com. And as always, people in this program may have interest in the stocks they talk about, and the Motley Fool may have formal recommendations for or against those stocks, so don't buy or sell anything based solely on what you hear in this program. For Dan Sparks, I am Sean O'Reilly. Thanks for listening, and Fool on.